this may come as a surprise, but the people who make the most money in recessions, or doesn't matter what the market's doing, is not traders, investors, accountants, financial advisors. It's none of those people. It's actually people who do something called market making. And market making is providing liquidity for assets to be traded on exchanges. If you've watched my channel for a while, you've heard me talk about providing liquidity on decentralized exchanges, which we're going to talk about some strategies here. But market making is nothing new. This has existed in traditional finance since the invention of stocks or any kind of tradable assets. Just like you can provide liquidity on decentralized exchanges, you have market makers who provide liquidity on traditional exchanges. So when you buy your Tesla stock, it's not the brokerage that's holding the inventory. It's market makers like Morgan Stanley, Credit Suisse, Deutsche Bank, Goldman Sachs, etc., who says, hey, here's 200 million in Tesla, here's 200 million in cash. Use my liquidity only when the price is between X and Y, and they profit off of what's called the bid to ask spread, aka the trading fees. So that's why trading fees are so high, because it goes to the market maker. It's concentrated liquidity all over again, and now it exists in crypto. So today, we're going to be talking about some concentrated liquidity strategies to deploy on Uniswap for what I think is to come. So before we get started, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research, but use this channel as a starting point. So without further ado, let's get into it. So if you watched my last video on my GMX yield farming strategy, you kind of know where I stand on the market. I do feel like we're not out of the woods just yet. I don't feel like we're in a bull market just yet. I could be wrong, but interest rates are still really high. Eventually something's going to break in the economy. Once it does, the Federal Reserve is going to have to drop rates. They're already printing money, as I showed in the last video. You can look at the M2 money supply. Once that happens, then we're going to see the bottom. In my opinion, I'm not trying to talk in for sure terms here, but the market always bottoms, at least throughout history, has always bottomed after the pivot in lowering interest rates. All right, so I don't see why it would be any different this time, especially when we've printed more money in the past couple years than we have throughout history combined. On top of that, I talked about how you have CEOs of these different companies selling their stock. Mark Zuckerberg sold millions in stock. Jeff Bezos sold $240 million in Amazon stock. And Jamie Dimon sold $140 million worth of JP Morgan stock after he's been at the helm for 18 years. This is his first time selling stock. So what does that say? Jamie Dimon's the CEO of a bank, the largest bank in the United States. I always say, watch what they do, not what they say. All right? And if he's selling JP Morgan stock, that means he's bearish on the economy. And I don't think crypto has gotten to a place where it can break free from traditional finance yet. Nothing operates in a closed vacuum. So if traditional finance goes down, the S&P goes down, these stocks go down, I think it's a high chance that crypto will go with it. However, we do have the Bitcoin halving. We have, MicroStrategy's buying more Bitcoin. We got the Bitcoin ETF. We're all hoping for that to get approved. And, real world assets, we have a few narratives. So it's hard to tell. So you want to kind of position your portfolio in a way to where no matter what happens, you'll be good. And I always like to bet on what I think is the most probable outcome. So today we're going to be talking about a few concentrated liquidity strategies that support my beliefs on what I just said, and how you can make some passive income. I suspect this will be a short-term liquidity position, so let's dive right into it. All right, so like I said, we're going to be providing liquidity on Uniswap. Uniswap is the largest decentralized exchange in crypto. The cool thing about providing liquidity on decentralized exchanges is that those traditional market makers that I talked about that provide liquidity for exchanges in traditional finance, they're not legally allowed to provide liquidity in crypto. So that means the yields are higher for everyday people like you and I. It's like the first time in history where everyday people can be market makers. And I do believe that if you know what you're doing, this is the best way to generate passive income on a risk-adjusted basis in the history of mankind. So let's look at the Bitcoin chart. You see Bitcoin's been pumping, and it's because of the ETF. People think the ETF is going to get approved. Hey, I think it's a high chance it'll get approved as well. Multiple, not it, them. However, what goes up must come down. I don't think we're just going to soar up to all-time highs. I do think that it's possible that we'll, meet resistance here and probably come back down, at least to this channel here, probably 40, maybe even this 35K level and retest this as support. So for this kind of position, you can either wait if you feel like it's going to get up to 50K, 48K, 50K. You can either wait till it gets up there to enter the position, but I'm entering into a Bitcoin USD position. Now, your range is totally dependent on how much time you have to manage the pool. And you can use things like Arbitrum Finance. I made a video on that and kind of help you and say, hey, sell when this happens, whether it's a time frame or a price being hit. But I'm going to set my range from around this 47K level down to 34K, right? And, a good thing to think about when you're providing liquidity is where is the volume going to be going? Like, another reason why I don't think we're in a bull market is because look at how low the volume is. And if you look at where the volume was in the bull market, it was triple the volume than where the volume is now. So if you're expecting a drop and, things go down way faster than they go up, that happens every time because the fear of loss is way larger than the desire to gain. So what I'm doing is setting the range from around 47 all the way down to 35K because I believe it's going to be some good trading volume, and this will allow me to buy Bitcoin at a little cheaper. So I'm making passive income while I'm waiting for my price to be hit, essentially getting paid passive income to buy the dip. Let's look at these Uniswap top pools. The other two pools that I'm entering is ETH-USDC and BTC ETH. Let's look on the chart and talk about why. So, obviously there are some ETH ETFs out there, but people are way more excited about the Bitcoin ETF. So ETH hasn't been pumping as much, but I do think we're going to at least come back down to this trend line. Like, we've been bouncing off this trend line for a while. So it's not a bad idea to have a range of maybe, like, if you're more risk averse and you think there's room to run 2,600 down to 1,750 to where this trend line is. Like I said, if you have more time to manage this thing, or if you use something like Arbitrum Finance, then you can set a tighter range. But I do think we're at least going to come back down and test either this level, our trend line, or we might even come back down here. Like I said, look at this volume. It's not super crazy. It's even lower volume than what we had back here. The next one is ETH-USDC. If you look at this chart here, every time we've gotten to this point, we've bounced up. We always talk about that flippening. I do believe it's going to happen because utility trumps store of value all day long. And, Bitcoin is compared to digital gold. Ethereum is compared to digital oil because it has utility amongst different things, NFTs, DeFi, the real world asset narrative. It's a lot of different things being built on ETH versus Bitcoin. It's just designed to store your value and be able to send transactions for cheap and secure. And that's also why oil is worth more than all precious metals combined, because oil is used in many things. It's used in our hair, it's used to build roads, it's used in plastic, it's used in a lot of products. So in this liquidity position, I'm going to enter in around right here, around this 0.51 area. And I like to set up different tranches. I'll set up one to go to this level here. I'll set up one to go to this level here. And maybe I'll set up a tight range to around this level, right? And the wider the range, the more capital I'll put in, because you do have to worry about impermanent loss. But the reason why I'm setting it from here to here is because, like I said, as we come down to this point, we came back up, right? We were here and we went up. We were here, we went up, and now we're here. And I do think we're going to go back up because I do believe that, as ETH usage picks up as we're going into the beginning of the year, you have stablecoin liquidity increasing on ETH, and you have TVL increasing on ETH as well. So transaction fees are going to go up, continue to go up, and ETH is going to continue to get burned. So by setting your range from bottom to top, you will be entering 100% ETH. And as the price goes up, the smart contract is going to be selling your ETH for Bitcoin. So you're essentially getting paid to take profits in Bitcoin. And when I say paid, passive income, like we talked about. The last position I'm looking at is Link USDC. And I'm looking to set my range from $16 all the way back down to around $10, right? Because I think we're going to come back down and retest our 62 EMA before we, go up and start breaking through these levels. Big reason why is because this has been a big level of resistance. It's knocking against the ceiling just like a fly on a light bulb. And the more retests you have, the saying, the stronger the base, the higher the chase. That goes from support as well as it goes for resistance. So the more retests we're having, the more confident it's making me that we're going to have like a small correction because the bears are beating the bulls right now. So by entering the position from 16 down to 10, you're entering the position at pretty much 100% USDC if you enter at current price. And as it's going down, the smart contract is buying Chainlink for you. So you're getting paid passive income in USDC and Link to buy the dip in what I believe is one of the most important protocols in crypto, if not the most important protocol. And again, normally I would go on like something like Builder Metrics or Uniswap Labs and like look at the 24-hour volume, 7-day volume, like see how this pool would have performed in the past. But like I said, when you're a liquidity provider, it's a good thing to anticipate what volume the direction is going to come in. And, like we talk about this being met with resistance plenty of times for the past few weeks. That means, like we talked about, the downward spiral is always higher than the upward. And that's why if you look at, the bull market, there's way more green candles going up and it's fewer larger red candles every time. Literally every time. You can see it here, you can see it here, you can see it here. So if we think that Chainlink's going to have a drop and it's going to drop fast, that means volume is going to be high. And that means, like I said, we can make money, we can buy the dip, and then we can exit our pool. You can go on Aperture and enter the pool and say, hey, take me out once the price hits 10. So even if it nicks it and comes back up, you're out of it. Obviously, if you decide you want to get back in, you can. If you like strategies like this, click the cat only link in the description, book a free strategy session with me. We've just launched our beta course/coaching platform where we turn you into a yield farming and investing professional. I'll show you the same strategies that I'm using to generate returns for investors in my hedge fund. We walk you through how to conduct proper technical analysis so you master your entries and your exits. We show you how to develop the proper mindset and rewire your brain, because when you're investing, you have to go against your emotions and certain things. We show you how to navigate DeFi securely so you don't get hacked. And then we have an extensive course on yield farming. We show you how to find pools, when to enter, how to know when to exit, different platforms that you can use to kind of help automate or hybrid your experience. Literally everything you need to know so that you can generate passive income on strong blue chip assets and be able to sell them when the bull market comes. And the cool thing is, it doesn't matter how much money you have. You can create a liquidity position for $5 or $50,000 or $500,000. Obviously, when it comes to that, you want to make sure there's enough liquidity, and we show you how to look at that too. So if you got value from this video, I ask that you consider subscribing, drop a like, comment, share with a friend. And with that, thank you so much for watching, and I'll see you in the next video. Take care, everybody.